Two people, same job, same salary, same city. One of them pays thousands more in tax every single year than the other, legally, not because of some loophole for the rich, but because of one basic idea about how tax actually works that almost nobody is taught. By the end of this video, you'll understand it better than most adults and know exactly how to use it. Let's start with the myth. You've probably heard someone say something like this: I turned down the raise because it would push me into a higher tax bracket, and I'd actually take home less money. Maybe you've said it yourself. It sounds logical. It is also completely wrong, and believing it can cost you real money over your lifetime because it makes people afraid of earning more. Here's the truth: getting a raise, a bonus, or a higher paying job will never, not ever, cause you to take home less money overall. It is mathematically impossible under how the tax system actually works. Understanding why is the whole concept, so let's break it down. Income tax in most countries, including the US, works on a progressive marginal system. That means your income isn't taxed all at one single rate. Instead, it's sliced into chunks like layers of a cake, and each layer is taxed at its own rate. Picture it like this: the first slice of your income, say the first $15,000, gets taxed at the lowest rate. The next slice, maybe from $15,000 to $60,000, gets taxed at a slightly higher rate. The slice above that gets taxed at an even higher rate, and so on, upward, slice by slice. Here's the key thing to understand. When you earn enough to reach a new, higher bracket, that higher rate only applies to the income inside that new slice. It does not reach backward and tax your earlier, lower slices at the new, higher rate. Your first $15,000 is always taxed the same, no matter how much you earn above it. So if a raise pushes part of your income into a 24% bracket instead of a 22% bracket, only the new dollars, the ones above the threshold, get taxed at 24%. Every dollar you were already earning keeps its old lower rate. You always end up with more money in your pocket after a raise. Always. So why does this myth stick around so hard? Partly because paychecks are confusing. Payroll withholding sometimes pulls more tax upfront on a bonus, which people mistake for losing money, even though it evens out at tax filing time. Partly because it's just easier to repeat a scary rumor than to sit down with the actual tax brackets. But this misunderstanding has a real cost. People turn down promotions. Freelancers undercharge because they're scared of the next bracket. Workers decline over time. Every one of those decisions based on a myth quietly costs real money. Multiply a smaller raise or a declined bonus by 20 or 30 working years, and you're easily talking about tens of thousands of dollars in lost income. All avoided by understanding one basic fact about how brackets work. Now, here's where this gets genuinely useful, not just myth busting. Tax brackets apply to your taxable income, not your total salary. So the smartest move isn't avoiding a raise. It's legally lowering your taxable income. This is the actual $1,000 lever. Contributions to accounts like a traditional 401k or a traditional IRA come out of your paycheck before tax is even calculated. Every dollar you put in reduces the income the government taxes you on that year. Picture two coworkers, same $60,000 salary. One contributes nothing to retirement. The other contributes $6,000 a year into a 401k. That second person isn't taxed on $60,000 of income. They're taxed as if they only earned $54,000. Their tax bill drops. Their retirement account grows. Same paycheck, same job title, a different tax bill. Because of a decision, not a loophole. This same principle shows up in other places too. A health savings account, if you're eligible, works the same magic. Money goes in before tax, lowering your taxable income, and it can be used for medical costs later. Even the standard deduction, that flat amount nearly everyone can subtract before tax is calculated, exists because of this same taxable income idea. Learn where these levers live and you're not evading tax. You're using the exact rules the tax code was written to include. Here's the part that turns this from a tax tip into a life-changing habit. Lowering your taxable income by a few $1,000s a year doesn't just save you tax once. Do it consistently for 10, 20, 30 years, and two things stack on top of each other: the tax you saved each year and the growth that money earns sitting in an investment account instead of a tax bill. Small, boring, repeated decisions compound into a genuinely large number by the time you retire, often tens of thousands of dollars more than someone who never used these basic tools, despite earning the exact same salary. So, what do you actually do with this? First, stop fearing raises, bonuses, and higher paying jobs. Mathematically, more income always means more take home money. Second, find out if your employer offers a retirement plan with a match, and contribute at least enough to get the full match, since that's free money layered on top of the tax savings. Third, if you're eligible, look into an HSA or an IRA as additional places to quietly shrink your taxable income every year. None of this requires an accountant. None of this requires a loophole. It requires understanding one basic concept: brackets tax slices of income, not your whole salary, and your taxable income is more flexible than most people realize. Check your pay stub. Ask your HR department what retirement options you have. One 5-minute conversation could be worth thousands over your career. That's the entire concept in 10 minutes. Taxes are progressive. Brackets only tax the slice above each threshold. And the real lever isn't avoiding income. It's legally lowering what counts as taxable. Use that consistently for a couple of decades, and it can easily be worth thousands of dollars quietly showing up over your working life. If this helped you see tax a little differently, subscribe for one basic concept explained clearly every single day, and drop a comment with a topic you want broken down next. See you in the next one. Same salary, smarter decisions. That's the whole game.